In today's video, I will show you a super strategy that you will be able to use in all time frames and in any type of financial asset. For today's strategy, we are going to use an SMA or MA, Simple Moving Average, and the Fibonacci levels, more precisely, the 61.8% level. For this video, I am going to show you the strategy on the 1-minute chart in the euro-dollar. The first thing we will have to do is select the Simple Moving Average. We will use this moving average as a filter. That is, if the price is above the moving average, we will only carry out buy operations. If the price is below the moving average, we will only carry out sell operations. We will configure the moving average of 300 periods, but on a higher hourly chart. How could it be in this case 5 minutes, since the operations will be carried out on the 1-minute chart? By setting this up in this way, the moving average will take the candlesticks from the 5-minute chart. Once this is done, we will change the color to red, and we will increase the thickness to the maximum. Now, what we have to do is find trends to break. For example, since the price is now below the moving average, I will only be looking to make short trades, so the trend we need to find is a downtrend. We'll know because we can join all its ever smaller points of the line, like in this case. Once we have found that trend, we will wait for it to break and correct, that is, to cross the line that we previously marked, as it may be in this case. Once that trend has been broken enough, we will plot the Fibonacci levels from the beginning of the trend to the bottom of the trend. We will be left as follows. To place the sell trade, we will wait for the price to touch the 61.8% Fibonacci level. If the price touches it, we will carry out the operation. We will put the stop loss almost reaching the 78.6% area and the take profit in a risk-benefit ratio of 2 to 1, that is, twice what we put our stop loss. Now, let's see an example of a buy operation. We first identify the price above the moving average. In this case, we will only carry out purchase operations. Then we identify an uptrend. We can know this by joining all the high points with a line. Once we have done that, we will wait for that trend to break for a correction to take place. When it breaks out, we will plot the Fibonacci levels from the beginning of the trend to the high point. We will then wait for the price to retrace to the 61.8% zone. If it does, we will enter a buy trade. We will place our stop loss almost reaching the 78.6% zone, and our take profit in a risk-benefit ratio of 2 to 1. That is, twice our stop loss. It is important to clarify that the correction to the 61.8% zone must be made within 3/4 of the duration of the trend. To know this, we can measure how long the trend lasted with the ruler tool. Once we know how long, we will simply have to grab a calculator and divide that time by 4 and multiply them by 3. This will give us the time in which the correction to the 61.8% zone should occur. If within that time the correction does not occur, it is better not to perform no operation. And ready, I hope this strategy has been useful to you. Do not forget that before trying it with real money, you need to try it in a demo account so that you can put it into practice by yourself. Do not forget to subscribe so as not to miss any strategy, as we upload the best strategies every week.